Good, got it. Okay. Okay. So,
sorry, Michael, before you start there, thanks to that person who put it in the chat. I've just hit record. So our webinar will be recorded and will be available on bstai.ie in the coming days. So just so that everybody is aware of that. Michael.
Okay, so I'm just looking at Rachel here. Rachel, can you hear me? Give me a thumbs up if you can hear me. Grand, that's a handy way of knowing that things are working. Sorry, I may be a bit slow on this because I'm actually more used to Classroom than I am to Zoom. Okay, so this is kind of all the things that I've done wrong over the years, and how I've stopped doing some of them wrong and I'm still doing others of them wrong. This is a question that most students would consider to be the most difficult question there is, and probably many teachers would consider it to be an extremely difficult topic as well. Okay, so it's question 5 for newly qualified teachers, PMEs, and teachers who don't like question 5. And I can subtitle it what I was and will be doing wrong. Okay, because I really don't have it got yet. I'm going to break tonight into looking down at 6 areas, and I'm going to try and focus it on the idea of things that go wrong for us, and things that students struggle with. This is not in any shape or form telling anybody how to do question 5 or even how to teach question 5. It's not my place to do that in any shape or form. But some of the troubles that we've had, and when you start off teaching question 5 particularly, often you're struggling with it, sometimes the way that students are struggling with it. So while it's intended for newly qualified teachers, I know there are many experienced teachers here who on one level may not get much from this, but they may find that most of the stuff that I say they actually don't like at all, and it validates the way that they're doing it and gives confirmation to the way they're doing it. And it's nice to get a little bit of confirmation sometimes, so that even if you walk away kind of going, his ideas are rubbish, my ideas are much better, then I'm very happy that you're walking away with that. You've got a validation of what you're doing, and that is a great thing to do as well. So we're going to look at issues with finding figures, issues with terminology, with formulas and units. For most people, I think that then the big one is comments, a little bit on section A, and then finally moving forward. Okay. So on the left hand there, we have what would be traditionally the way of laying out the calculation cost of sales is gross profit. Gross profit less operating expenses is net profit before interest, preference, dividend, and taxation. Less the interest, less the preference, dividend is net profit after interest, preference, dividend, and taxation, minus the ordinary share dividend should give the retained earnings that was given in the question. All right. Now I'm going to make reference to shapes that I use, but I'm not here to sell those. I know some people have seen them before. I know some people like them. I know some people don't. That's absolutely fine. But I'm not here to try and sell that idea, but they will appear because I do use them. All right. Now, just for some reason, ever since I've been in secondary school, I think it must be that I've used pi as a symbol for profit. It's just a quick way of writing profit. You will see me use it here. So I was at an in-service of my DCU once, and we were talking to the people doing it, and sales less cost of sales is gross profit less operating expenses is operating profit. And of course, operating profit is exactly the same thing as net profit before interest, preference, dividend, and taxation. I think we all start off using this term because this is the term that's in all the textbooks that we've been using. But since they changed the question back in 2001, that net profit before, I'm just going to keep calling it net profit before rather than saying everything, that net profit before became the same thing as operating profit, which we're using in question 1, and operating profit, which we're using in published accounts. So it seems to me strange that we would continue to use this big long term for dropping into formulas when it's simply operating profit. And then it's exactly the same as before, but it's just looked at in a different way. We take away we basically divide it up into 4. We take it apart, we deconstruct it. So we take away the debenture interest first, we calculate and take away the preference dividend next. We're left with the owner's profit. Now, the debenture and preference are both, in some shape or form, we know they can be considered either a straight loan or a type of a loan. But what we do know is that the net profit after the owner's profit is all of that is available just to the owners of the business. And then we take home their dividend, and then we're left with their retained earnings. Now, it mightn't look much different what's left on the right on what's on the right, but I believe it is. And I believe that that is because what's on the left is a list of complicated terms that students are often struggling to learn. But what's on the right is a kind of a logical deconstruction of taking it apart. And even if they struggle with it, rather than struggling with a term in the middle of a list of terms that they're struggling to remember, they're able to say, that's the bit I have a difficulty with. And generally speaking, what they have the difficulty with is the preference dividend and then the ordinary dividend. Okay, so even if they're able to say, well, look, that bit there and that bit there, I find that a little bit difficult. Just drawing, and you don't have to use the colors, that can be just drawn with a marker. Okay, but it gives the idea of, you know, if you start on the top and then move to there and then move to there and then move to there, there's a kind of a logic to it that I don't believe is really here. Okay. Now, one of the things I'm sharing with you is, and I've put this as a green background, just it's not green background on the actual thing I'm sharing with you. I'm sharing 20 years worth of this PowerPoint, of a PowerPoint that allows you to do this. So what we have here is the figures from the question, not the entire question. I've made it a bit bigger to hopefully make it a bit easier to see. Here's the trading profit and loss bit. Here's the relevant bit of the balance sheet so that you can calculate the preference. And then you can get your calculator and you go sales less cost of sales less operating expenses is operating profit, and you can put the figure there. And then you can take each of the bits. And what this is useful for is it allows, you can bring students up to the board and you can get them to do it. And they're working it out. And I'm not putting any words here, but we're still doing things in the right order. So sales less cost of sales less operating expenses is operating profit. And then you're able to go, well, what's that? And they go, well, that's the interest. Now, it's a gigantic hint that the interest is there because I've put it beside the interest. Okay, what's that? And then they can work it out. And what's that? And you can be asking them all the way through the question. Now, if you don't like these here, I've also given you the exact same screen. This side is exactly the same, but the figures are gone over here. So it's a little bit more advanced and you can ask them to work it out. So, you know, you could put this up on the screen for any year from 2001 to 2020, and they can go down through it, and you can keep just saying, what's that, and what's that, and what's that, and how'd you find that? Okay, and how'd you get that? And why is that figure there? Okay, and what's that subtraction? How did you find that figure? And you can keep asking them, but what they're doing is they're actually describing the method, but they're not caught up in the terminology of it. But the calculation of figures is hopefully consistent for them. And the idea of moving from one figure into the next is making some sense to them. And then in the third part, so each year comes with 3 slides. You can hide one of the 2. So here is the slide that allows them to find the current assets and the current assets without the closing stock and the current liabilities. And there is the part of the finance buy that allows them to find the capital employed and to split it into the equity capital and the debt capital. Okay, or the equity funds if you prefer. So there's 3 slides for each year. So there's about 60 slides there in total, and that allows you to bring people up, and it gets a chance to give them loads and loads of practice of doing the questions, but doing the calculations without at this stage being worried about the actual terminology and trying to remember those long definitions. At this stage, even you get it actually nicely gives us a chance to bring in the first formula being, for example, being capital employed. And you'd often find that students don't understand why we're doing a gearing formula at all. They are asking the more common sense question, how much of the business is actually ours? But you know, they've all seen it at some stage. Can't pay, we'll take it away. And if you say to a class, can't pay, they'll just chorus back, we'll take it away. So it gives the idea that it's the debt part that presents a threat to your business. And if the debt part is getting out of control, then you're going to have a problem. So you want to know while common sense says you might want to know how much of the business is actually yours, the accounting part of you is saying how much of your business has been financed by debt, and therefore how much of a threat is your business exposed to. Okay. So that's just something that I do to try and make the calculation of those figures at the start a little bit easier for them. One thing that has worked really well in our class, it's a mixed boys girls class, and I've been doing this the last couple of years now, is the girls own the business. We were doing different things, trying to imagine different groups, trying to define debenture people, trying to define preference people, trying to define owners. But since, given that we have a mixed class, once we went with the girls, everything just became so much easier for them. You know, they're able to look after paying the boys, and then the girls get it. And even the boys are saying the same thing. Okay, we get paid first, and then whatever is left, it goes to the girls. In our particular case, we were lucky enough, we've got two lads called Henry. So the debentures have been borrowed from the Henrys. So as we go through it, when we're looking at these figures, well, we got to pay the Henrys first. And the Henrys actually smile at that. They're not getting any money, but they actually like the thought that they're getting paid first. And then the rest of the lads have to get paid because they're the preference people. And whatever's left, that the girls get. And the girls are anxiously looking on to see how much they're getting. So rather than it being a kind of an abstract concept, it is real to them. The Henrys want to know how much they're getting. The other lads want to know how much they're getting. And the girls definitely want to know how much they're getting. I kind of stick to that now because it was confused me. I tried for gender equality by switching every year, but I could never remember which year I was in, and I just messed it up completely. So if you were in a boys only school, you might have it at the footballers. If you're living on a county border school, for example, Portarlington, you might have it owned by the Laois people and borrowing from the Offaly people or something like that. I'm sure there'd be some way of coming up, but it has worked very well in terms of, you know, they have to get looked after first. What are they called? Debentures. Okay, who has to get looked after next? The other lads, they're the preference. And who's left? The girls. All right, we're the owners. Okay. And I'm repeating myself here, but this before profit, I said it's just simply the owner's profit. Sorry, it's simply the operating profit, and it's the profit that's going to be available to everybody. Okay. So the boys and girls are all going to get that. The Henrys are going to get that. The rest of the lads are going to get this. The girls are getting this. The girls take home this, and the girls leave this in the business. Okay. So the process of going through it makes sense to them, and it's logical and it's common sense as opposed to accounting rules. These 14 figures here are the figures we need for answering the question. What I cannot for the life of understand is how any student would walk into an exam, do question one, do some other question, and after maybe 2 hours would sit down to try and write down the formulas and work out the figures. That should be done to me in the first few minutes of a question. Writing down these 14 figures that you need should be about the second job you do in an exam when you walk into the exam. The first thing you should be doing is writing down the formulas you're going to need, because if you write them down the moment you walk into an exam, the chances are you're going to remember them properly. So if you write down those formulas and you write down the units and you figures, you really have all the raw materials you need for answering the question. There is no further memory requirement on you to do anything later on. You just literally are now writing up your notes from having the answer put in front of you. Okay. When I do it here, I used to just leave that figure out there because it wasn't needed, but I've found the last couple of years that if I have everything, you know, from the operating profit, the top red corner, the bottom, the blue half, by keeping everything in, even if I don't need it, I don't really lose any amount of time, but it does lead to more of the figures being correct. Okay. So the operating profit, everybody's going to get that. The Henrys are going to get the debenture interest. The other lads are going to get the preference. The girls could take home all of this. The girls do take home this money, and the girls don't take home this money. And as I said, that works because it's logical. Okay, in terms of formulas and units. Okay, so these are the areas we have to comment on. Now, bear with me if you don't mind, please, on this, because it doesn't come across straight away what I'm trying to do here. There are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There are 13 formulas there. Now, those 13 formulas should see you well looked after for Part B. There are 2 gearing formulas, 2 liquidity, 2 profitability, 1 solvency, 2 share formulas, and 4 dividend formulas. Now, if you were to look at some of the older textbooks, you'd think you were answering 22 or 23 formulas, and there is no value to that because you have overextended yourself and you've done the job and you're just putting down excess formulas that they're unnecessary. Now, what's also interesting is every single formula, without exception, is just literally one figure compared to another. Most of the time, one figure over another, and with the liquidity, one figure to another. But all the formulas are literally 2 entry figures. Now, what an awful lot of schools do is they don't start this until really, really late in 6th year because it's considered to be a really, really difficult question. And I don't believe it is. All right. But if you're starting this in April of 6th year, there's a very good chance that you're going to be overwhelmed with the complexity of working out the figures, perhaps some of the terms you haven't seen before, 15 formulas to learn, 15 sets of units. So what I've done, and it's worked really well, is in the long run, less than teaching the formulas, I'm teaching the relationships between the formulas. Okay, so if you've got the current assets to current liabilities, you've effectively got current assets minus the current liabilities. If you've got the return on capital employed, you've effectively got the return on equity funds. If you've got the earnings per share, you've got the dividend per share. If you've got the price earnings ratio, you've got the period to recoup. And by flipping upside down, if you've got the period to recoup, you've got the dividend yield. So they all link to each other. So what I do is early on, I just teach 6 formulas. Okay, so I teach one gearing, 1 liquidity, 1 profitability, the solvency, which sometimes we leave till the end. I teach the 2 share formulas because I think the market, the price earnings ratio is probably the most important formula there is. All right. And what that means then is if I teach those and I teach them hopefully reasonably well, when I come back to later on, I really only have 2 brand new formulas extra to teach. After that, everything I'm doing is simply teaching the connected formulas. From 6 formulas, they've suddenly found it easy to have a whole bunch of extra, and they've never faced into the task of trying to deal with 15 formulas at a time. Teaching those 6 formulas also has the added advantage that it introduces of every type of unit. So I found you know, if I teach only those 6 formulas early in even 5th year, I said I've got a percentage, I've got to 1, I've got times, I've got CPS, and I've got years. I know some people answer price earnings ratio and recoup in years. I know some people answer it into 1. So I've left it so you can do both. Okay. But you've got a little bit of units of everything. And even then, a lot of the time, on because the liquidity ratio stays to 1, the profitability ratio stays as a percent, the EPS turns into DPS, which means it keeps the cents per share. The price earnings ratio turns into recoup, which means it keeps the year. So there's a lot of things are relatively easy in the process of learning that. And I said that's something I do early on in 5th year. And even if you think about it, the layout that we're using of this can be used as a precursor to question 1. Sales less cost of sales is gross profit. Gross profit less operating expenses is operating profit. Operating profit less interest. All right, and we can just work down, and it's very similar to what we're going to be doing to question 1 anyway. What students struggle a lot with is the issue of whether a share is by 100 over 1 or not. And the trouble with students is the way they try and learn it is they literally work through every single Formula 1 going, is that by 100 over 1 or not? Gearing, is it by 100 to 1 over not? Interest cover, is it by 100 over 1 or not? Okay. I'm pointing out the obvious here to people who've done it for a wee while, but there's only 2 formulas. There's only 2 answers are by 100 over 1. If the answer is in percent, it's by 100 over 1, and if it's in cents per share. All right. There's a good few are in percent, but there's only 2 answers are in cents per share. Okay. And what I sometimes have done with class is when they ask me, I go, what's by 101? And I go, they all are. And they go, no, they're not. Or I go, well, they all are unless they're not. And then they look at you like there's something wrong with me. Okay. And then they go, well, what are the ones that are not? And they go, well, the 2-1, the years and the times. Because there's only 3 things you're saying. You can do it that way. You can do it in reverse. Well, none of the formulas are by 100 over 1. And they go, they are. We've done them. And they go, okay, well, none of them are unless. And you go, well, what ones are? And they go, well, the percent is, and the CPS is. So there's only 2 things you have to remember that involve it being by 100 over 1. Or sometimes what I go is, well, the percent is, and what's the one other answer that needs 100 over 1? Okay, so well, percentage, I mean, they've been doing percentages by 100 over 1 since the year dot. But I say, well, what's the one other thing, answer, that will need 100 over 1? And then they're able to go, I'm going to have a think, cents per share. Okay. So the way that I used to teach it was that I kind of, and they would always be trying to learn it was, okay, it's something over something, maybe by 100 over 1, and then they would try and remember what's the units. Okay. So what I do now is, when I ask them what's the formula, the first thing they have to do is tell me what the units are. So I've brought the units to the fore rather than what is something over something else. So if I say gearing, they have to go percentage, and they'll tell me what's on top and what's over bottom. Okay. It doesn't look much, but it has made it easier for them to learn the formulas. So I go price earnings ratio, and they go years, and then they've got to tell me what's on top and the bottom. So that, you know, they're learning, they still have to learn it. It doesn't take away from that. But by reducing the complication of the order of the sums, by reducing the complication of the terms, by reducing the complication of the way they write down the formula, there's nothing big, but there's a whole series of small steps that do build up to something. Okay. So I said, first thing I'd expect them to say is, right, what's the formula? Because it's the it's the units that determines whether it's by 100 over 1. And once they get that, the 100 over 1 thing becomes easy. But I said, then the first that I have to do is I have to drill and drill and drill them into what's the units. Okay. So I can do my formulas. On the top, I'm doing the formulas the way I would do them. On the bottom, I'm doing the formula the way that most people would do them. So by the way, these are computer drawings. My drawings would be filthy compared to these. But I'd be drawing debt capital. I'd be drawing a small box over a big box. So that's how I would picture it. I can draw it really quick, but I would get those units down as the first thing. Okay, interest cover there is the operating profit over the interest. Okay, and I said, no, how long does it take you to draw a circle? And a dirty quarter of a circle. All right. But on the same thing, I'd be doing it. And I'd be expecting them to put this down, as I said, the very, very first thing they would do walking into an exam. Okay. Hopefully there on the top, you can see how the relationship between earnings per share becomes dividend per share. All right. And in words, the same thing on the bottom. Owner's profit over owner's dividend or ordinary dividend. Okay. Depending which you like. And I said, it's all about how, if you get one formula, what you want is the pattern, that rather than learning the next formula, you want the pattern of how it brings you in. To go back to what I said at the start, it's not learning a list, it's learning a pathway. Okay. This is a top half of a blank page I have on my website. It'll be done on a copybook, but if you're lucky enough to have access to A3 photocopying, it's a handy way of getting students to be able to do a question in a hurry when you don't have 45 minutes to get them to do it. There's a space there drawn so that you can draw your formula or write out the words of your formula. There's a space here where you can write down the units of your formula. There's a space there's spaces up on top where you can write down those key numbers that you're going to need later on. So there's a space here for you to write those numbers into the formulas. Sorry, and go back. Okay. On the full page, there's the thing on top. There's a space for you to write in this year's figure and a space for you to write in last year's figure, and then there's the space for the comments. So here are the things that I would be expecting a student to spend the first 10 minutes of any exam doing if they're going to do this question. First thing I would do is insist they write down their formulas straight away. The chances of writing down a formula wrong if they're answering in the first minute or two are relatively remote if they know their formulas at all. I would write down the units straight away. They will think they know the units, but if they're coming to this question after doing a question one that went south on them, they're not going to remember their own name with 100% certainty. So they're going to be writing down every kind of rubbish there. If they write those formulas down in the first minute or two, they almost certainly will be perfect. Thirdly, and we will come to it next, we would write down the prompts for the comments that they're going to do. Okay. And fourthly, they would work out and they would write down these important figures that they're going to need. So they have everything that they need to answer the question, all done in the first 6 or 7 or 8 minutes of the question, of the exam. Okay. If they're writing 2 minutes after the exam is over, the examiner will stop them. You know, if they're writing down their exam number, the examiner would have to let them finish it off. But they're not going to let them finish this off if they're running out of time. That is the 2020 question. So here, as I said, is the figures, the important figures put down first. Here is the formulas dropped in. Here is the numbers dropped into the formulas. Above the diagonal, I've got this year's figure. Under the diagonal, I've got last year's figure, and I just use the dot as a quick way of showing whether it has improved or disimproved. It's, you know, it's, if you want a student to do it in a hurry, you can get them to fill it in, and they're able to just put a dot to show it's going the right direction. A green number there, and there is a green number. That means I worked out those answers from the figures given in last year's box. Okay, and underneath that we have our comments. So let's take a look at those comments. Okay. The comments, now, my coming to this is from the perspective that when I was doing this before, I was struggling with the marking schemes. The marking schemes seem to include things that were worth marks, and then they would be missing next year, and then maybe 2 or 3 years later, they might reappear. And then there'll be something else put in, and I found it very hard to find the logic of the comments. So what I did was I basically cut them up, stuck them in and piled them into groups, and came up with the notion of 3, 2, 1. So even from a student trying to learn comments, if they're thinking I have to comment 3, 2, 1. And these comments really only apply to profitability, liquidity, and gearing. They change a little bit for the others, but under the 3, you have to make an exclamation point of fact. The firm is profitable. The firm is not profitable. The firm is highly geared, or the firm is low geared. The firm does not have a liquidity problem. The firm has a liquidity problem. You have to justify that with your figures. So you've got an equals figure, which means you've got a this year's figure. You've got a squiggly one, which means you've got a last year's figure, not always, but you've got a last year's figure. And you've got this, which is an indication of an improvement or a disimprovement. And from what I understand, you say improved or disimproved. You don't say increased or decreased. And then you've got a statement of why. Why is this firm profitable? Why is this firm highly geared? Why does this firm have a liquidity problem? And that part is relatively easy and students do relatively well on it. From what I can see, the two is where they fall down. You need to have what does it mean to be to not have a liquidity problem? What does it mean to be profitable? Or what does it mean to be highly geared? And what follows as a consequence? What does it lead to? Okay, and we will take a look at these in a moment or two. So rather than just it being random comments, which you get the impression sometimes it is when you're jumping between different marking schemes, if you want to try and nail it down to an approach, this tends to see you all right. Okay, and then we finish up with the trend and whether the shareholders or the debenture holders or whoever we're actually looking at would be happy or content with the situation. So when students are being asked to learn it, you're kind of getting them to get, well, right, learn the 3, learn the 2, and learn the 1. They will still struggle with this. Okay, most of their difficulty will still fall here, but they're better at identifying it, and when it comes to revising it, they're able to target that area there. So if we take a look at some of the things we've done here. All right, I've just pulled a few of these from a couple of different questions. Right, so the explanations are this firm is highly geared and the interest cover is good. The statements of fact are the gearing is 53.76%, but it was 41%. The interest cover is 5.56, but it was 6.3%. And in both cases, it has disimproved and hence the dot. Okay. Why is this firm high geared? Because gearing is above 50%. Why is the interest cover in this firm still good? Because it is greater than 4 times. Okay. Now, on these are not proper sentence answers. I accept the not proper sentence answers, but they're nailing the point that must be made. And then, what does it mean for a firm to be highly geared? Well, it means they are dependent on outside finance to a greater extent than if it was low geared. And as a consequence, there is a risk from those outside investors if we are not able to pay them back. What does it mean for interest cover to be good? It means that we do not have a problem making our interest payments. What is likely to follow as a consequence of this? Well, if the numbers are disimproving, there may be less money available for us to pay out a dividend or to reinvest back into the firm or to reduce any debts that we may have. Okay. And would the shareholders or whoever be happy with this? Well, no, because the trend is negative. What we'd be saying is, well, we accept that the figure is still, the times interest cover is still good, but we don't like the direction of the movement. If we look at profitability, we do exactly the same thing. We state that the firm is profitable or not. We for return on capital employed, we have an is figure, we have a was figure, and we can say that in this case it has disimproved. For return on equity funds, we only have one figure, but we're able to compare them and say that they are better than the risk-free, and the risk-free is currently running at about 2%. But I would always include the preference and the debenture, particularly the debenture, because what does it mean? It means that we are borrowing at 6% to make 10.75%, and that makes sense. So that would indicate an efficient use of the resources by management, because they are borrowing from people at 6%, and they're using those 6% borrowings to make 10.75%. What does it mean? Well, it means then and look here, this is really clever. I like this, and it's not me that made it clever, it's the marketing scheme. We're able to say exactly the same thing as before. In this case, if the profitability is good, there should be more money available to pay out a dividend or to reinvest into the firm or to reduce the debt of the firm. However, the trend is that the figure is getting worse and it's negative. So we would still be happy with the profitability of the firm, but not happy with the trends that it's going in. If we look at liquidity, we're able to say exactly the same thing. This firm has a liquidity problem because the asset test is 0.88 to 1. However, it was 1.3 to 1 and it has disimproved. We have a liquidity problem because this figure is less than 1 to 1. That is our why. What does it mean if we have a liquidity problem? Well, it means we only have 88 cents of liquid assets available to pay out every €1 that we owe in the short term. And that has to be learned exactly as is. You have to use the phrase liquid assets and you have to say owed in the short term. Okay, so that is an explanation of what it means to have a liquidity problem. What does a liquidity problem lead to? It means that we will have difficulty in paying our current debts and also perhaps paying future dividends. And again, our trend is the shareholders will not be happy with this because not only are the figures not acceptable, the trend is that they are getting worse. So we've used the same approach to be able to say exactly the same type of comment in each of these three cases. Okay, as I said, they will still struggle with the why, the means, and the what does it lead to, but it narrows down what they're struggling with and it makes it easier for them to go about the process of trying to learn that. And then it gets easier because we have to say less. And the problem here is that students are going around saying loads of stuff in here that they don't need to say at all. So under our share price, and not everybody seems to include that, but it's a really easy one to do. The share price has gone from 160 cents last year to 135 this year, so it has got worse. This indicates a lack of confidence in the firm. One thing to say. The earnings per share in cents per share is gone from 20 down to 18.6. It has gotten worse. And the price earnings ratio has gone from 8 years to 7.16 years. Now, I must admit, after 30 years, I still don't ever know really what to say with this. Fortunately, there's not much to say. What you have to say is a simple statement of fact. It will take 7.16 years to make back the current market share price based on current earnings. It's a learn-off sentence. Okay? I've tended to put that in there because it's to do with shares and it's kind of makes sense. We have issued 350 of the we have issued 350 of the authorized 400 shares already. We have issued 87.5% of the shares. There's not that much left to issue. And back again to the trend. We may be happy with 18.86 cents per share, but we are not happy with the trend. In terms of dividend, look how little there is under all this dividend stuff. There's really only three things you need to say. Okay, you repeat yourself with the period to recoup, word for word, the same as you did with price earnings ratio, except for that one word. Instead of it being based on earnings, it's based on payout. Yield, we can say exactly the same thing as we did with the profitability. Okay, it was 4 last year. It's gone up to 5.19%. That has been an improvement. All right. But it is not greater than the risk-free. We're using these same figures here before. Again, what you're saying is we're borrowing at 6% and it's yielding us 5%, 5.1. That's not great. And I like this. I asked a few people who correct on this to be sure. Dividend cover, in this case, it happens to be 2. It's never really clear whether it should be good for going up. So I just literally went back to what it is. We paid out a dividend of 35 of the 70 that was available. That's 50%. We should ask ourselves, is enough being retained? If we're paying out a lot, then not enough is being retained. We're able to compare it to last year and say that we were retaining more or less than last year. But that's an awful lot easier than trying to comment whether dividend cover has gone to 2.2 up to 2.4. Is that a good thing or a bad thing? That we can't remember what it means. So we literally make sentences of common sense. The dividend was 35. We paid out 35 of 70 available. We paid out 50%. Okay, is paying out 50% too much? Probably. We can do the same thing with solvency. We've got the tangible fixed assets and the investments, and we've got the debentures. Debentures of 400 are secured by assets of 1,030. Okay, that's just a statement of fact. Sorry, there's our statement of fact. The firm is solvent. Why? Because our debentures of 400 are secured by assets of 1,030. Different people work at it in slightly different ways. I won't say which one is right. I have a way of doing it, but I'm sure other people do it differently, and it's right too. Look at these comments here. They're always there, but we're asking questions, not answering them. The fixed assets here include no intangibles. Okay, that's a statement of fact. I excluded the intangibles. If they include the investments that are currently market value of 130, but they're falling. Okay, that's just a statement of fact. Are our assets valued properly? Have they been depreciated properly? You don't have to answer that. You just have to ask the question. And what I always put here, and it's a me thing, I'm not saying it's right, but I always put here, I look how many years are left at the before the debentures have to be repaid, because I'm presuming we're going to try and use this investment money to try and clear off some of those debentures. So are we putting enough money aside to pay those debentures when they're due? We might be very profitable this year, but have we collected up enough to pay off the debentures if they have to be paid in the near future? Sometimes we don't pay attention to that. Sometimes it's really far away. Sometimes it's very close. And then the last three, we've got our investments. We got simply your cost, your market value. It's either good management or bad management. And again, I just tie that back into can we use that money to clear the debentures? And then in the sector, you state what it is. People don't do that. It's a handy little mark. You state what it is. You give something about the short term, and you give something logical about the long term. And if you do that now, if you can, I would err on the side of caution and try and give two, so that if you make one rubbish point, you should still pick up full marks by having that second point. Finally, if you're asked to make a recommendation, there are marks going for making the recommendation. So if you decide not to give the recommendation, what you're doing is you're throwing away marks. You may be asked about a loan. The only thing that's really likely to change about the loan is gearing will change straight away with the loan, and solvency will change straight away with the loan, but profitability won't be affected for a year, so we shouldn't touch it. Liquidity won't be affected because of the fact that the loan is long-term. And there was a year the question was asked in the form of a report. And again, a lot of people just threw those marks away because they just didn't do a report. And a report is exactly, to me, the same thing as a memo, an official memo that's signed. You only have to add in one extra line, and that is the terms of reference to get full marks. So it's to somebody, it's from somebody, it has a subject title, it has the terms of reference, it's dated and signed off. Just think of it almost like a formal email. Okay, and that's the comments. Two things left to look at. So section A and then moving forward. So to date, there have been three things that have been asked in the section A that are not already asked in section B, the activity formulas. Okay, now your weaker student, and tonight I'm really kind of thinking about the weaker students. You tell the H1 students the formulas and they probably remember them, and you tell them the comments and they remember them, and they'll get the H1 for you. But the H6 student that you want to turn into a H4 or H3, the H student will get the H1 for you, and you'll get the H3 for your students. That's the difference. So if you're asked to work out cash sales or work out cash purchases or find opening stock, sometimes it's closing stock, but generally it's opening stock. So you're given total sales, you've got to calculate credit sales, and you've got to then do a nice simple subtraction to find cash sales. Or purchases, you've got to calculate total purchases, you've got to calculate credit purchases, and a nice simple subtraction finds cash. If it's find opening stock, you're given the rate of stock turnover in the adjustment, so it must be important. You have the cost of sales in the question, but it's not clear you need it. You're going to have to find average stock, and it's mentioned in the adjustment. Closing stock is in the question, but again, it's not clear you'll need it, and then you have to find that answer. Now, what I can't always understand about this is how it can be made sometimes so complicated. when it can be so easy. Finding both cash sales and cash purchases. If you're doing cash sales, the huge big deal is that the student makes the connection that debtors is connected to credit sales and matters. All right, they're trying to find credit sales. They're given period of credit in the adjustment. So you're told the period of credit. You're not told explicitly you need debtors, but it's credit sales, so that needs to be stressed. And there's 12 months in a year, and that's not obvious in the question, but it needs to be stressed. Because two of these figures are money figures. The debtors is a money figure and credit sales is a money figure. And debtors is the small money figure and credit sales is the large. So that might be around 40,000 and that might be around 600,000. And two of the figures are time figures. So you're told that the period of credit might be 2 months or 3 months, and it's obvious that there's 12 months in a year. And they're the three things you need to work out this fourth figure. All right, and all three of them are there easy for you if you just know to use them. So to work it out, the small money multiplied by little by big equals little by big in this. The little money figure multiplied by the big 12 months is the same thing as the small months multiplied by the big money. Okay, I'll say that again because you can rephrase it a few different ways. The little money by the big months is the same thing as the little months by the big money. Okay, now that means debtors by 12 equals credit sales by the period of credit. And then what people do is they write it down and they start bringing things across and they start crossing. And if you just look at this from a calculator point of view and you just learn it this way, debtors by 12 divided by the 2 or 3 months gives you credit sales. You work it out in about 4 seconds. Okay, and the same thing is true then with if you're working out for purchases, creditors by 12 divided by period of credit gives you credit purchases. Similarly for the rate of opening stock. Okay, we tend to do this formula that finds average stock, and then we start, and we do it because we've seen it laid out like that in the marking schemes. Okay, and we think that's lean to work. But if you just lay it out in a calculator straight across, cost of sales, which you have, divided by rate of stock turnover, gives you average stock. If you just simply multiply it, double it on the calculator and subtract your closing stock, you've got yourself your opening stock. It's about 2 or 3 seconds work. Okay, you've got 12 marks, 3% of your entire leaving cert, if you can just learn to work it across like that in literally a couple of seconds. You know, it's frightening how quick and easy it is to do that once you're comfortable just going across like that. Okay, we're nearly done. Moving forward. Right, the immediate thing, of course, is the new answer book. What we have here, I have an answer book here, and on top of it, I have overlaid a page from a copybook. I dropped those red lines in, moved the copybook very slightly so that it's not actually hiding the lines of the answer space. It is identical in size. The only thing that's different is the top of the copybook has this double line blank space, whereas the top of answer has a line going across there. If you look at the lines, they match up virtually perfectly. The only thing that's different is the margin space in the copybook is noticeably wider than the margin space in the answer book. Okay, so we're going to have to get used to answering in these. Here is a double page of a copybook where I've put in my a gearing set of comments, and I struggle with it. So like we said before, I wrote out my formulas and units straight away. And then I came back later and dropped in the numbers once I'd found them. And then I could come back even later and work out the answers. And there's my is, and there's my was. And then I make my comments, and I'm barely fitting them in here. Okay, so I think students will need to use copybooks a lot now. Perhaps use that extra line up there, but I think we're going to need to use copybooks a lot to make this work. Otherwise, I think we're going to have major problems in this question. And we probably need at least, possibly more in some cases, at least a full double page to answer each of those. So I said, if you're not using copybooks already, I really would think about switching over to them. The exam has not been changed since 2001. In 2001, they changed from the 2 columns figures and finding net profit to finding operating profit. How could we change it? I've been trying to think about the last couple of days. Possibly instead of giving us a last year's figure, they might give us an alternative firm, but that would be kind of cosmetic. So you might be asked to make a judgment between which firm you should buy, and you've got this set of complete figures for this firm, and you've got to work out the figures for this firm and do a comparison. The only thing it would really change, though, would be you wouldn't be commenting that it's got better or worse. You'd be saying this firm is better or that firm is better. I wonder, is there the potential for more calculations? I mean, we've been limited to cash sales, cash purchases, and opening stocks for in Section A. Is there potential for new questions to be brought in there or not? I mean, I've tried to do some, and I think there could be. You know, you might get something where you've something with debtors that allows you to work out credit sales, and you might have a relation, like a percentage relationship between sales and cost of sales or something like that. Maybe something more complicated in there. I'm pushing it here. I know people say it's gone, other people say it's not gone. You know, departmental accounts was gone effectively for higher level until it reappeared as a 60-mark question. I'm wondering if question 5 disappears, could it come back in some variation that is a bit of a question 5, but also is bringing aspects of the old type C incomplete records. And for those who are too young to know what that is, it was an incomplete records question where it was based on the formulas. So you might be given the current ratio and the acid test, and that allowed you to find closing stock. And you might be given something about average stock, and now you had closing stock, so it allowed you to find opening stock, and it fed through like that. So, you know, I don't know, but it's been exactly the years. I really can't see these questions staying the same, right? And of course, it may all go out the window with the new senior cycle. So that could change things massively. It almost certainly will change things massively. All right. It may be the opportunity they want to get rid of this question altogether. In terms of going forward in the next couple of days, we're sharing a couple of things with you. We've sent you the link already. If I just go to here, I've shared 10 years of these questions, formula questions as Microsoft Office forms, but I've also shared the same 10 years as Google Forms because some of you are using one or the other. If I go down through here, so in each question 1 and 2 ask you to fill in your name and school email address. You'll be able to copy these and change them all you want. Okay, so here's my 12, my important figures, and as I said, I even include preference dividend because I like to keep the pathway consistent as opposed to just the figures. So when it comes to doing gearing, they're able to go 600, all right, over 1182. All the figures are already there to drop it in, and it's going to be a percent, so they work it out as a percent. And then for interest cover, they're able to go straight to 120 over 16, and it's times. Return on capital employed, it's 120 over 1182, it's percent. Return on equity funds, it's 92 over 582, it's percent. Current ratio, it's 168 over 86, it's to 1. Acid test, by the way, I keep changing this picture. Look here, I messed up on that one. Usually I'll change it again. Usually I have the order reversed here to force them to read it. So its current asset is 168 minus 75 to 86, and it's to 1. Earnings per share is 92 over 460, and its CPS Price earnings ratio is the years divided by the answer to your EPS. I'm going through these for a reason, okay, as opposed to just trying to bore you. Dividend per share, there's the dividend, there's the number of shares, period to recoup, there's the years, and we have the dividend per share. Dividend yield, there's the market price again, and we have the dividend per share. Dividend cover, I know some people do it as EPS over DPS, but I don't have EPS here and I don't have DPS here, but it works exactly the same, and it's even quicker if it's the earnings over the dividend. It's exactly the same thing, earnings per share, dividend per share. So it's literally 92 divided by 36, and the answer is in times. And the bit I'm interested, look at this now, calculate opening stock if the rate of stock turnover is 8. 536,000 divided by 8, multiplied by 2, minus 75, answers got. That quick, okay? So there's the 8, there's the 536. 536,000 divided by 8, multiplied by 2, minus 75,000. 12 marks got. Calculate credit sales if the period of credit to debtors is 2.5, okay? Debtors 93, multiplied by 12, divided by 2.5 equals answer got. 8, probably 8 marks got, a couple of seconds. Simple subtraction to find cash sales. Calculate total purchases. Cost of sales 536 plus closing 75 minus 59 is total purchases. Instantaneous. Credit purchases. Creditors 61 multiplied by 12 divided by 1.5 equals credit purchases, and we finish off and we've got a simple subtraction for the cash sale purchases. Because you will have your own copies of these formulas if you want them, you can duplicate your own formula, and if you're doing only 6 formulas, you can just keep those 6 formulas in and you can get rid of all the rest. And then more cleverly, when your students are doing the final revision, you can make another duplicate of this, get rid of the pictures, and they can use their papers to work out the figures themselves. And you can go, right, this is 2020, what's the gearing? And they will work out these 12 figures themselves, and they'll have it on their own piece of paper, and they'll just put the answer in here. And of course, it's a form, it'll come all self-corrected to you, okay? The only thing I think I've put in it is I put 1 mark for their name, all right, which you have to correct yourself, 1 single mark for your name. And the reason I do that is it's a handy way of checking. If I'm correcting halfway through, it's a handy way of checking which ones I've already corrected and which ones I have to come back and correct later on. Nearly finished. So that is the, so yeah, we're sharing the PowerPoint that you can put up on the board, let them work out the figures. We're sharing 10 years worth of Microsoft Forms and 10 years worth of Google Forms. And then on the website, let me just come up here to the website for a moment, sorry. I've got this thing up in my way. I'm just going to shove that over there. Okay, so. Ratios. Okay, there's all the questions, there's all the marking schemes, and these here are the summary pages, useful for you if you need to do a question, you haven't had a chance to work it out yourself and you need the answers in a hurry. All right, so if you want to correct, it's a handy one to print out, and you've basically got all the answers there. You can use it like a marking scheme, but it's kind of hopefully can be read differently. This link here, if you want students working out calculating formulas in a hurry, these are all the calculated figures for you. So you can say, right, there's the operating profit, capital employed. You can get the right, do the formulas for 2020 based just on this, or you can use it just to put up the figures on the board. So it's kind of handy for you rather than you having to work out figures. So it does go back to all the way back to 2001 and a couple of years back after that, but they're not much help to anybody. Higher level breakdown is handy for pointing out which are the formulas in part A that they seem to like. So obviously dividend yield is a huge big deal. all right, doesn't do much except to kind of go, look, you know, you really, really do need to know that. Handout's pretty rubbishy at this stage. It's kind of dated. It's no harm, but it's just going to skip down to this one here, which I've changed. Oh, before I do that, there is a handout with the just general comments. So, you know, formulas are there, just the hints of what goes where, why things are why they are, and the type of comments you could choose, but just it's a generic one. And that one is a blank one. So if you are lucky enough to be able to photocopy onto A3 particularly, and you want your students to do it and only take a sheet of paper home as opposed to taking a copybook home, that can be helpful for you. And then this last one here, thought shake chopped. Too many people on our house on the internet. Okay, I'm going to come back to that in a minute as we are nearly finished. I've amended that as well. So I've taken the 100/1 things out of formulas. That's very strange. Okay, so let me just get back to where I was. Sorry, got so many windows open now. Okay, I'll come back to that in a minute if I can. All right, second last thing to say is if there are any people here who are SEC correctors, I said I've come at this from the point of view that I found this question really difficult and I did something to try and figure it out, but I've never corrected. And hence it is quite possible that I am omitting something important or I am saying something that is completely wrong, all right, that I am not aware of. I'm at this game long enough not to actually care if I'm making a fool of myself anymore. I've done it so many times at this stage. So if there's anybody out there who's an SEC corrector or is in the know and has noticed something that they are not happy with, I would ask you please contact either the Dublin or Galway branch so that I can fix it and I will put a follow-up and correct it, because if I'm doing it wrong, I'm doing it wrong for my students as well. And I'm not that bothered if how I find out that I'm doing it wrong, as long as I get to fix it. Okay, let me just see if that comes through yet. Yes, it has. Okay. So this is the second last thing. We'll be finished in 5 or 6 minutes, I hope. So this here is the profitability, gearing, and liquidity formulas. These are the share and dividend formulas, and these are the Section A formulas. These ones I have sometimes changed the figures to make sure you can work out all three in every single case. And this is to do all the formulas. If I click on one here, all right. So this is the 29th. These are all the past questions. So this is Shannon and it's gearing, profitability, and liquidity. There are 12 questions in here. It only takes a couple of minutes to do. If you give it to a student for homework, if they put your email address in there, it will go to you. It's emailed to you. So this is if they're sending it to a teacher, this is the teacher's email address. Okay. So there has to be something in there. That's why it was left at nowhere.never. It'll accept that as an email address, and there obviously is no such thing. All right. And the student will put their name in there. I have a space. Doesn't like space. All right. Student would put their name there so you know who it comes from. And the student puts their school email address there, which means you have a link to reply to them straight away. Okay. Now, the first 6 questions are the formulas. So the gearing formula, and you've got the words down here. And if you just simply click on them in order, so click debt, click capital employed, and click percent. And you go submit, and you get it right. Okay. Interest cover is, and I'm going to do this one, and I'm going to just get the next couple of wrong. So interest cover is operating profit over debenture interest, and I switched from calling it interest to calling it debenture interest every single time, because they do get mixed up between interest and dividend. I know it's stupid, but they do. So if I call it debenture and debenture interest every single time, all right, and I'm going to get that one wrong, by the way, I'm going to say percent. Okay. And if I do that, it gives me another go. So it's a learning thing as opposed to a testing thing. So if I try again, I can drag the one out and I want in there. Okay. Now I want to just, don't need you to kind of be going through. So I'm just going to throw out real quick. All right. There's one more of these formula questions, which is that's the last one. And then what we're into is you've seen the same pictures as we had before, and you're working out gearing. And what's gearing? Gearing is, 500 over, I have to move that again because I can't see it from where I am, 1087. And I'm not going to work it out, so we'll say it's 6 and it's percent. Okay, and again, if I get it wrong, it will give me another go. And I'm just going to battle through these really fast. Just current ratio, second acid test. All right, and when they're finished, your student can review. They don't get a percentage, but they can review their question. They can see what they got right. Okay, you can see I just clicked through them. If it's and they can pull up what should have been the answer. And when they get into here, they can see the same thing. They can see in green what they've got right, and they can see what should have been the answer. Okay. And you as a teacher, what you've received is a complete detailed breakdown of the question, including a percentage for them. So they're getting it as an assessment for learning. You're getting it as an assessment for learning, but you're also getting it as, what's the other word for it? Begins with an S, can't think of the name of it. The one where you get to actually get a real result, and at some stage you could want if you use it for calculating grades or whatever. Okay. So they've got that as well. So there's that for every single one of the last 20 years. And then the very last thing is there is still one thing that still goes really, really wrong. And it's this, okay? The student who's just doing it without paying attention to what they're doing. And it breaks my heart, but I'm constantly at them. So what they'll say, gearing 500 over 1087. And I'll go, no, it's debt capital over capital employed, and I'm trying to get them to talk it and say it out loud, but there's some of them it's really, really hard, and it's a really constant battle. So that is an hour and 10. Just to say big thank you to everybody. I'm going to turn off the screen share and we'll take questions in a moment. Michael.Galligan@egs.ie also works with m.galligan@egs.ie. There's my Twitter as well, at mgalligan_EGS. Gotta stop saying M with the microphone.
Thank you.
If anybody questions, please ask.
I have been monitoring your questions for you. You have quite a few have come in. Before we do, because I know some people tend to log off as we're doing questions. So before we do, there's just a couple of things I want to say. I have just put the certificate of attendance into the chat there again. It won't be available afterwards. So if you do want it, if you click on that link and download it for yourself, that will be brilliant. It's just an admin nightmare for us to send it out to everybody individually. Something that's come to myself and Lisa's attention, Lisa being the chairperson in Galway's attention, is that people are asking their students to sign up to our webinars and they're promoting them in their classrooms. I'm going to ask that that's not done. Absolutely no problem. The webinars are recorded. Absolutely no problem if you decide to share parts of it with your students afterwards, or you decide to share the whole thing with your students afterwards. But we'd ask you not to have them signing up to the live lectures. We are limited on space on the Zoom, and sometimes we don't want teachers to feel guarded in what they're saying when they're coming to a teacher CPD. So if we could just ask you not to do that, especially considering in June we'll be having our exam review meetings, and it's just not appropriate to have students at them meetings. Okay, so start, and thank you very much, Michael. So I have a couple of questions flagged for you. Some of them came in email to Monaghan Education Centre, so I'm actually going to start with the ones that came in by email to Monaghan Education Centre, if that's okay with you, Michael.
Yep.
Lisa Carey was the first one that came in with a question.
Lisa.
And where is it? There's my, oh, hold on. She entered into a conversation with me about it. Sorry. Okay, so Thank you for this evening. Just 30 minutes in and I'm already finding it really useful. Just a quick one. We're introducing Leaving Cert accounting into our school for the first time in September. It will be in a special set and we'll only get 1 2-hour class. And so her plan, Michael, per week. So I was thinking of doing question 1 and question 9. Sorry, I've lost my part. She was thinking of doing question 1 and question 9, and then I was going to leave out question 5 and focus on financial accounting questions. If you were me, would you include question 5 as it's a definite, or would you spend your time on easier, in inverted commas, type questions such as club and published?
The thing that always frightens me with the middle section is the student who's absolutely terrified that something like a cash flow will come up. You know, the people who struggle with learning off the wordings of things. Like, I struggle with that myself. And I've been to a fair few in service where people said that they wouldn't do question 5 because they didn't feel it was suitable for their H1 students. And I've always felt, well, I have an awful lot more non-H1 students than H1 students. And a teacher, and I love this quote, and this is somebody I have enough, they said it joking, but I could see their point. She said, I'm starting question 1 with my 6th years on Monday, and by Friday week, they will have learned that they're not doing it. And when I did it in school, even, we would start it in like April. So, you know, it was such a difficult topic to leave it then. But if it started in early in 5th year, like, it can even be started, as I said before question 1. So I think you can get really good students up to it. And then now this is a personal opinion. History has shown it, but it can change. I think there's always what we would call a double entry question in there. You know, it might be tabular statements as a funny sort of double entry, but an incomplete records or a suspense, something like that has always been in there, like a traditional accounting double entry question. I can't really imagine no double entry question happening in there. So I think if you're well prepared with double entry questions and you've got question 5, well, at least you've got nothing to fear. I must admit now, and I'll say this, people ask me, do I cover everything? And I know it sounds like I'm going sideways. People ask me, do I cover everything? No teacher in their right mind is going to turn around and say that they don't, particularly on a recorded web session, and say, yes, I don't cover the entire course. Nobody's going to say that, all right? It's a ridiculous thing to say. Having said that, I have never managed to properly cover the entire course, because I can cover the entire course by doing a topic for one double class and move on and say I've covered it, and I have, but nobody would want to try and answer that question. But I'm able to say I've covered it. Okay, so do I honestly believe you can cover the entire course in that? I don't think so. So yes, you could do question 1, you could do question 5, you could do some double entry questions, and you could do question 9. There's a degree of risk still involved. The risk to me comes from the fact that while historically question 8 has contained parts of 9, and by that I mean that budgeting, costing has contained budgeting, but to date, budgeting has never contained costing. Who's to say that that can't change? There's no law says that can't change. So I would be thinking that if you're really stuck for time and you were able to do question 1, which is double entry, and you were to do double entry topics, and you were to do question 5 from the beginning, and if you've got 10 years worth of forms and you're able to turn that into 20 years, you're able to give a form every single week, even when you're doing other topics, so that they never lose it, then I think you could do it that way. And I would bring in question 5.
Thanks, Michael, for that. The other question came from Daniel O'Callig. Oh no, sorry, Claire Daverin. Sorry. I'm wondering. I haven't done question 8. Done question 8. My students will be doing question 9. I would always have covered question 8 in case, but in case part of it is incorporating question 9, as you said, but with COVID, I'm wondering, what would you suggest?
Again, I'm going to give you a formal answer, and the formal answer is always that you should cover everything, and nobody can tell you anything different.
Yeah.
The reality is probably that if you do question 9, they'll probably be safe enough. But once you do that, you are accepting a degree of risk. And it's a trade-off, because if you do both, then you are reducing the quality of what they get, and you have the potential to impact their studies because they've done half the time on a topic. So, you know, you'd always say they're probably fine with question 9, but you could never turn around and guarantee anybody anything. And I said it does make this weird situation where every teacher will always tell you what the official answer is. I bet you anything you like. I'm not admitting to anything, but I bet you anything you like, what teachers are thinking is often different, but you can't say anything other than you are obliged to cover the entire course. And if you think the risk is worth taking, that is your choice, and you're probably fine. But then there is the potential trouble if the other thing comes up.
Okay, thank you, Michael. And there's come up a lot in kind of different guises. So I'm just going to paraphrase it from a few people. But what about the sector part of part B of the ratio question, and in particular 2021 and COVID and that kind of situation? Would you be commenting on it, or?
Yeah, why not? I mean, you know, Brexit is still there anyhow. So let's say, for argument's sake, you've got a food exporter. You'd want to be completely stupid not to be commenting on the impact of Brexit. Okay, the comments there, I don't think with the sector, from what I got, and again, I don't correct. My background to being here is not that I'm a corrector, because even if I was a corrector, there's probably stuff I wouldn't be allowed to tell you. I'm coming at this from somebody who found it really tough, was doing a dog's dinner of it, and tried to improve the way I was doing it. But there has to be a gap between when, you know, when the exams are written and when they're actually put to students. So from what I can gather, the comments have to make sense, and they have to wrap around the idea of the position this firm is in the short term, and then the position that this firm will be in a slightly longer term. And also, you know, it's an easy mark, turn around and just repeat what industry the firm is in. But I think if you say in the short run and you make any 2 points and there's any truth to them, then I can't really see how they cannot give you those marks.
Okay, there was one, oh yeah, there's been a number of people, and it's not related to question 5, but there's been a number of people since you mentioned the answer booklet. Number 1 asking, is it available online? And I said that it's on the SEC website. Would I be right with that, Michael?
Yes, it is. Well, in fact, the folder that I have shared with you as well, I have downloaded the answer booklet, and what I will do is I will put the answer booklet into the folder that we shared with you. The folder, as I said, has 2 documents. One is a Word document and the other is a Google document. They're exactly the same, just depending for people who don't have Word, and it links to the 12 forms. The PowerPoint things for putting up on the board is in there too, if anybody wants to use them. But I can.
Tonight's PowerPoint, Michael, a number of people asked about that.
I'll tell you, if people want it, I'll throw it in.
I think there's a lot of appetite for it.
Okay, yeah, I'll put it in there, and it'll take me probably a half an hour or whatever to get it up. Okay, but
I'm sure they're not going to chase you for that. And then the last thing about that, and then I think we better leave it for it because there are people wishing to get kids to bed and whatever.
Yeah.
But the tab question, have you any advice for that in the answer book?
The only thing I can think of, and this is again purely personal opinion and hence not worth spit, the only thing I can think of is the bank adjustment, where 2 things happen in the 1 month, you know, where you have the direct debit and the standing order, usually around May, June, or July. I could see it being possible, and I have nothing to base this on except the size of the answer book. But I don't think you want to throw out the question because of the answer book. Would it be possible, and I think it might be, that we have 2 adjustments happening in the 1 month? So for example, you might have the purchased a new business followed by the revaluation of the business happen in January. or you might have a bad debt recovered and paid a creditor with equipment happen in November or October or wherever. So I can see it being possible that you combine things. You still have you still have two adjustments, but if they don't land in the same boxes too often, I don't think it should be too hard to do. But as I said, look, that's me speculating and guessing and kind of going, well, what could you do? You know?
Margaret MacDonald there, Margaret MacDonald, our national president, has just come in to remind me to say that a submission has been made on behalf of the BSTAI to tell the SEC how unsustainable the answer booklet is, and they have not received any response to date. If Margaret, well, I've given Margaret speaking rights there, if she has anything more she wants to say, but just so that people are aware that we have made that submission on behalf of members. Okay, Michael, I think actually, to say on that, I think there's potential for that submission to work, and my logic being, nobody's going to ask DCG to start doing their technical drawings on a copybook size piece of paper. So, you know, if you can argue that it doesn't work in one subject, and you can prove it doesn't work in one subject, then I think you may be able to make an argument that and there's another subject that also has specialist requirements, but is being treated differently. I just see in from Aisling Doherty there, is there a separate page given to students for budgets and tabular questions, A3 page lined? Not that we know of. Sure, there's not.
No, the A3 page was just a thing that I referred, because I said I got fed up bringing copybooks home, and I had made up a page on A3 that what I needed students to be able to do a 45-minute question in 20 minutes. All right. Oh, yeah. Actually, that just mentioned that briefly. The comments that I do on that A3 page, another thing that went wrong for me was I was getting them to write down, you know, greater than 4, greater than 1-to-1, all those type of things. And then they started going into exams and writing the same things, greater than 4, and thinking that was an acceptable answer. But they don't have room to write out the full sentences. So what I do now is I make them write out the full sentence in each box, only using the first letter of each word. Now, I know it seems weird, but it actually works really well. So the firm is high geared, TFIHG. You know, they get used to it very quickly, and I get used to it very quickly, and they fit full sentences into those little boxes, but they're thinking full sentences as opposed to thinking unequal sign 4.
Aisling has just come back there and she said they used to be given this A3 page. She said that there was a sample given by the SEC a few years ago, but that's gone.
No, it's gone. It was only out for about 2 or 3 years, and I actually have it up on the website, or I think I may have taken it down recently on the tabs page, but it's gone because the answer book has superseded it. Okay, perfect. Yeah. Okay, so thank you very much for your time, Michael. And we're going to call it an evening there. I hope everybody found the session to be very informative. I know I did, and I haven't been teaching accounting this year. And we look forward, just to remind you, there are 2 more events this year with the BSTAI. Myself and Lisa Young from Galway will be doing a presentation on life in the business classroom and how we run our classrooms. And then we have another webinar for economics. Not that there's much point mentioning it to the accounting crowd tonight. There is an economics webinar as well coming up. So the links to register are available online, and hopefully we'll see you at some of them. Thank you. The last economics class I taught was May of 1988. Not going back there. I'm going to stop the recording now.